These reforms are designed to promote fiscal equity. What does that mean? If you are low-income earner, you are exempted from paying PAYE from January next year. That is 1/3 of our workers, both private and public sector combined. And do you know what the amount is? 100,000 naira or less.
You're welcome to the Economy and Politics Conversation. I'm Moto Abasi Abasekon. With less than 2 weeks to the year 2026, there are mixed reactions as Nigeria prepares to enter a significant phase in its fiscal policy. This edition will discuss Nigeria's Tax Act implementation, implications for households and businesses. At a recent media workshop hosted in Lagos, the chairman of the Presidential Fiscal Policy and Tax Reforms Committee, Mr. Taiwo Oyedele, used the opportunity to provide clarifications and further insights on the impact of the reforms on the citizens, business environment and economy when the Tax Act takes effect from January 2026. Mr. Oyedele highlighted 6 key changes the Tax Reform Act will bring to the socio-economic space.
These reforms are designed to promote fiscal equity. What does that mean? If you are low-income earner, you are exempted from paying PAYE from January next year. That is 1/3 of our workers, both private and public sector combined. And do you know what the amount is? 100,000 naira or less. 1/3 of our people who are working cannot boast of 100,000 naira a month. Life is hard. Like, how do you even survive with 100K in a month? And we still collect taxes from them. We're supposed to be topping up that they are 140 and 50K so they can meet their basic needs. When a human being can't meet their physiological needs, they're not only hungry, they are angry. When you combine hunger with anger, you cannot be rational. That human being is irrational by default. And those are the most dangerous. That's why it's so easy to recruit Boko Haram and bandits in the north. It's so easy. Those guys wake up in the morning, they carry a plastic bowl trying to beg for food. They sleep on the streets. It rains, they are there. It's sunny, they are there. You know? So those are the things we need to address. So this new law is exempting the low-income earners, number 1. Number 2, anyone who earns between 100,000 naira to about 2 million naira a month, that the ones we put together as a middle class. And people will say, there's no middle class. I say, it's not true. When I say there's no middle class in Nigeria, people will clap for you, but you just lied. Every country has a middle class. You can say the size of the middle class has shrunk, and you'll be right. So what does it mean to be middle class? You are middle class if you can meet more than your basic needs. That's all. So in America, you may need $10,000 a month to do that. In Nigeria, I may need $2,000. If I with $2,000, I'll have nannies and driver. Buy food, your basic need, food, health, education, shelter, that's rent, and transport. If you can go on vacation, you are middle class. If you have a car, you are middle class. Right? I can give you, so we're not debating who is middle class anyway. I'm just explaining to you how we came up with what we did. Those who earn between 100K and about 2 million per month will see a drop in their PAYE. So which means from next year, January, their take-home pay will increase, even without any increase in their salary. Now, people who earn more than 2 million naira and above a month, they are our higher upper class income earners. And people can say, how much is 2 million naira? Do you know that these people are just 2% of the working population? Anybody who earns 2 million naira a month or more, you are in the top 2% in Nigeria in terms of income. So what will happen from January next year? A person who earns 3 million naira a month will see some marginal increases, maybe like 10K. It's not a lot of money per month. I know it's hard to even part with an additional 10K. If you earn 10 million naira per month, your additional tax would increase. It might get to 500K a month. If you earn 20 million naira and so on and so forth. But before you can even get to 25% of your income as tax, you must be earning at least 120 million naira a year. There's also another objective of economic growth. We're very clear from day one, and that remains the case up until now, that the fastest and the most sustainable way to generate revenue is to allow the economy to grow. If I'm unemployed, you can have the best personal income tax law. Your tax authority can be the most efficient in the world. You can't collect personal income tax from me because I am unemployed. If you'd like me to pay personal income tax, let's start our conversation with how do I get a job? Or better still, how do I become an employer? So that is the magic of economic growth. That is why you see all over the new tax laws, there's no emphasis on new taxes. There is emphasis on how do you remove impediments, how do you reduce the cost of business, and I'll tell you like 2 or 3 here now. I told you already about the reduction of corporate income tax rate from 30% to 25%. As of 2024, based on what FRS collected, FRS collected around 8.6 trillion naira from CIT. If you do the maths, taking away 5% out of 30% translates to around 1.4 trillion naira. So this is government giving 1.4 trillion naira to businesses next year. And that's not even the biggest one. There is VAT. We are all familiar with VAT. I'll try and explain some of the technicalities briefly. From next year, January, and that would affect your organizations as well. You work for media organizations, some of you online, some of you traditional. You've never been able to claim any input credit for VAT because the law says you can't. The new law from January next year, you become eligible to claim input credit. Like you will get money in your bank account. All that you need to do is be aware first, like we are discussing it now. Number 2, keep the records and then file the claim. So the next one I want to talk to you about is competitiveness. Nigeria needs to be competitive. Even within Nigeria, we are not even competitive. You are producing something in Nigeria, somebody goes to China to go and buy it, pay freight, insurance, delivery, import duties, it still ends up cheaper than the one produced in Nigeria. We need to fix that. We had a session with the organized private sector. A gentleman came, he was very prepared. He came with documents. So when we finished, he came to me and said, sir, all these things you are saying, they sound nice, but that's not our reality. He brought out the papers. He said to me, this is my product. I produce this in Nigeria. But I have some inputs and raw materials I need to import. The guy shows me, on my inputs, import duty is very high. On the final product, it is duty free. Do you want us to produce anything in Nigeria? Because just imagine that Nigeria made the output to be duty free, so it's easy to import, and places tariff on the raw material to produce it. And you want the producer to survive. I now apologize to the guy on behalf of the government to say, let's go and do more work. We now did more work. You know what we found out? It turns out that Nigeria imposes import tariffs on raw materials and intermediate product that is twice the average tariff for sub-Saharan Africa. Very awkward. Why are you taxing raw material and intermediate products when you want to produce? You know, so those, you can't even compete locally, let alone competing regionally or internationally, right? So those are also things we are fixing. The other one is tax harmonization. It's probably the most popular problem that any Nigerian will talk to you about, multiplicity of taxes. Officially, there are about 63 taxes and levies. Unofficially, it's more than 200. It doesn't make sense. Just put it plain. If you want revenue, and this is one thing that we want to encourage you to help us with, it is very popular in Nigeria, on TV, radio, newspapers, for people to say states must be creative with IGR. You know, anytime you say that, you know what they are hearing? They are hearing that they should go and invent a new tax. We saw one state, they have ozone layer tax. We said, do you know where ozone layer is? One state invented cemetery tax. Somebody has died. They tax you for every day you refuse to bury it. Please, do not ask any state or local government to be creative. We don't need their creativity. What we need them to do is to be efficient in collecting one or two taxes. Don't add new ones to the number of taxes. It's killing the system. It's killing the system because people pay more and government collect less because the rest of it is lost in transit. So we need to fix that problem. So how are we fixing it? We've identified the multiple taxes and we said to ourselves, anyone that we can fix with a new law is already being fixed with the new tax laws. Sadly, not all of it can be fixed with a new tax law. You know why? Many of them are actually written in the Constitution. You know, if something is in Constitution, you're going to write a law that is conflicting. A 100-level law student will win you in court. So, for example, you see bicycle levy, wheelbarrow tax, radio levy, TV levy, produce tax. It's inside Constitution like that. Nuisance taxes. So, what we have done, just to repeat, we've harmonized the ones we can without conflicting with the Constitution in the new tax laws. The ones that are in the Constitution, we've written to the National Assembly. We propose an amendment to the Constitution. And the good news is our proposal has passed second reading, is with committee now, the committee working on alteration of the Constitution. Another one is modernization. There's nothing you do today, even in your sector. You know, the way you wrote news is no longer the way you wrote them 10 years ago is different from today. If you don't move with it, it will leave you behind. So you actually have no choice. Now the next thing is AI. You know, before you used to pay people for writing so well. Now is can you even query AI well? You know, people are even saying PhD now. Do you need PhD anymore? Because it used to be about how well you can do research and write. Now, AI, you can just give the topic, the thing will write the whole report for you. For us as well, for the tax system, we need to modernize. Why do you have to go physically to an office to file returns? Why do you need tax clearance certificate for everything? Why do you have to fill a form that you need to be a PhD holder to complete the form? So, all these complications, we are removing them. Let just life be easy. We're even hoping that we get to a point very soon where people will not need to file their returns. The system will pre-populate for them. And we're seeing that happening in many countries already. South Africa, Rwanda, of course, more developed countries. It will pre-populate for you. But it also means that all of us need to be honest because things you do before and get away with it, the system will pick it now. And many people think that is a new tax law that is bringing it. No, it is not the new tax law. You know this thing about bank account and tax ID. Tax ID for bank account that is used for business and for earning income. So if you're a salary earner, that's an income, right? If you do buying and selling, that's business. So either your account is used for business or for income. There was already a requirement from 2020 based on the 2020 Finance Act that you must provide a TIN for the bank accounts. This took effect on the 13th of January 2020. So for more than 5 years, this requirement has been around with us. And banks had implemented it. Now, this whole ecosystem, where people earn income, they can hide their income, but they cannot hide their spending. Spending by design cannot be hidden. When you buy a car, you go and register before you can drive it. If you build a house in secret, when the house is ready, you know what you do? You connect to electricity. If you have extra money, something will say to you, can't you go on vacation? When you're going on vacation, your footprint is everywhere in the system. From passport to buying the ticket to entering the plane and immigration stamping it. Right? So, the way the system is designed to work is that everybody must declare their income themselves. We call it self-assessment. But we have a system validation. So if you go to government and say, my income is 2 million naira, and then we see that you spent 20 million naira, the taxman would ask you, you say you earned 2 million, but you spent 20. Can you explain? Is it like a gift or are you printing naira? So when you explain it and it makes sense, you are fine. If you can't explain it, the taxman will say, I take it that your income was not 2 million, it was 20 million. That's we call it presumptive tax or deemed tax assessment. Based on my assumption, because you haven't proven otherwise, that your income is 20 million, you have additional tax of 3 million to pay. So when they say you have additional tax of 3 million to pay, there's what we call objection. So you have 30 days to either say I agree or I disagree. When you say you disagree, the taxman also has a reason to say, okay, I see that you disagree, I've revised it, it's now 2.5 million. You can also say within 30 days, I disagree. That process keeps going back and forth until the taxman is tired and he says, I refuse to amend. We call it notice of refusal to amend. When you send that notice, the taxpayer has 30 days to either pay or to say, I want to appeal. If you appeal, it can be in court for 10 years. When the final determination has been done, you are given some days to pay. If you refuse, that is when the taxman can say to the bank, this person is owing government 2.5 million. Post no debit up to 2.5 million on the account. If you can do all of this, then revenue will come by default. Let businesses grow. Let the poor person breathe. Let the small company grow. Let these Nigerian businesses become multinational. Let Nigerians be posted abroad to be CEO, to be CFO. Let them earn dollars and send back. Let me tell you one other thing that we fix in this new law. There's this global process outsourcing ecosystem. Some of us, you can call your bank and you hear an Indian talk to you, right? Yes. They don't use Nigerians a lot for it. And you know why? Even though our English is better than India is number one country in BPO, business process outsourcing. India, with their English that is difficult to understand. Then the likes of Philippines are also doing very well. Between 30 to 35 billion dollars a year is what they earn from it. India earns close to 200 billion dollars from it. Nigeria can't even be, I don't even know whether we earn up to $1 million. It turns out that the biggest problem was our tax policy. You know what our tax policy says now, currently, before January next year? If you are Nvidia, you are Amazon, you are Apple, whatever it is that you are, or you're even, JP Morgan, you're looking for business process outsourcing. If you hire somebody in Nigeria to do it for you, the employer, become liable to tax in Nigeria. If you hire a Kenyan to do it, an Indian to do it, Filipino to do it, you don't have to go and pay tax in that country. So those people say, what's so special about these Nigerians? They'll go to Kenya, go to South Africa, go to the Philippines. And we have millions of young people, very tech savvy. Their English is better. Nigerian time zone is almost at the center of the world. Our policy is sending opportunities away from us. Under this new tax law, we've removed that impediment. Just imagine 1 million young Nigerians getting this kind of jobs, earning $2,000 a month. That's $2 billion every month. Not only is that going to help them leave their families out of poverty, that's FX that will strengthen Naira. So just little things that we haven't done well for so long, we're now trying to fix them.
It was also an opportunity for him to address the issues around the much debated capital gains tax and reforms designed to drive capital market growth.
The other thing is the capital market. So part of what we did was to harmonize the tax system. We took capital gains tax and merged it with income tax because we're trying to address some problems with capital gains tax. One of it is arbitrage. What does it mean to arbitrage? If I have a company and I want to sell that company to a new owner, if I sell the asset of that company and I make any income, I'll pay tax at my income tax rate on the gain. Let's say my gain is 100 million naira. My income tax rate is 20%. I'll pay 20% on it. If I take that company and sell the shares instead of the assets of the business, I'll pay capital gains tax at 10%. That is a loophole. If I do any business, I can artificially turn into capital instead of recurrent income and pay 10%. If I sell you my building and I pay tax, capital gains tax at 10%, you can claim deduction at 30%. If it's oil company, you can pay CGT at 10% on the gain and claim deduction at 85%. We needed to address that problem. Another one is, why is everybody paying 10%? When you see a tax rate that is flat, if you don't do anything, that tax is regressive. So we said, if you match it to income tax, low income earners will pay 0% CGT. High income earners will pay, if they are individuals, they can pay up to 25%. For the capital markets, we have exemption for everybody in the capital markets on shares. So just pay attention to what I want to say. Okay? That is the message here. All investors are tax exempt in the capital markets. 99% of them, the exemption is unconditional. If you sell not more than 150 million naira of shares in a year, any 12 months actually, you sell up to 150 million naira of shares with gains no more than 10 million, you are permanently exempted, no questions asked. That threshold covers more than 99% of investors in the market. The remaining investors that are less than 1% include pension fund. They are also unconditionally exempt. That includes mutual fund, unconditionally exempt. Real estate investment trust, unconditionally exempt. So even the 1% is now much less. Whatever is left of that 1%, we now say to them, if you don't want to pay capital gains tax, please reinvest your proceed. So when you sell 200 million naira worth of shares, Zenith, Dangote, Flour, reinvest it, Bua, reinvest it, GT Bank, and your tax, the gain you made is permanently exempted. That if you leave the following day, you don't pay any tax. But we know that if you reinvest, you have the temptation to stay a bit longer so that those new shares can appreciate, which is the problem we are trying to solve. By 2022, the big-time investors exited the market. Many of them were foreign investors. They bought dollar and crashed the naira. We thought that this provision we introduced would tempt them to stay a bit longer so that while they are making their gain, they don't crash our market. This one that you can just speculate, come today, wait 3 months, and exit when you hear, when they say one barrel of crude oil has fallen by $4. You go and sell and exit. We wanted to address that problem. We thought about exempting you if you had held on to your shares for like 2 to 3 years. But we studied different countries in the world. Do you know what we found? In countries where you say, I will exempt you when you hold on to your shares for 3 years, people hold on and stop selling. Because they stop selling, market loses liquidity. And if the market does not have liquidity, it can't grow. So after considering so many things, we came up with the idea of these few big players will be exempted if they reinvest. What did our people say? They said capital gains will collapse the market. Everything you see on this slide were reforms we've been trying to do in the capital market for more than 10 years unsuccessfully. All these things you see on the slide have been introduced under the new tax laws. From exemption of withholding tax on bonus share, to exemption from stamp duties, to reduction of CIT rates so that companies make more profits, all of them are there. Not a single one of it is being talked about. They then take the CIT, the capital gains tax, where they even have exemption, but with condition, and they say the market will crash.
No economic transformation has occurred in any country across the world without reforms that are strategic, intentional, and deliberate. the Nigeria Tax Reform Act presents a great opportunity for an economic reset in the country. As we brace up for the full implementation of the Tax Reform Act from January 2026, there are three areas that should be of interest to all stakeholders. First, effective communication from the Fiscal Policy and Tax Reforms Committee, National Tax Implementation Committee, the Federal Inland Revenue Service, and Finance Ministry to the citizens should be aligned and simplified across major languages. Second, the pace of enforcement and essentially tax administration across the Federation must be considerate, business-friendly, and appreciative of Nigeria's evolution. Third, the government has a responsibility to provide periodic updates on the progress of the implementation of the Tax Reforms Act, macroeconomic impact and projections, which must be aligned with transparency and accountability. It must be a win-win situation of compliance from citizens and businesses and accountability from government to ensure that the Nigeria Tax Act works for everyone. To our viewers, if you want to get further insight on this conversation, which is very critical for every citizen and household and businesses, visit the ProShare website displayed on the screen and follow our social media platforms to engage further. Also, you can log on to fiscalreforms.ng, which is the website for the Fiscal Reforms Committee, providing all the updates you need on the Tax Reforms Act. Until we come your way again, enrich yourself with knowledge and socioeconomic developments around you. I'm Outsourcing. Thank you for watching, and bye for now.